If you have a small amount of capital to trade with and you are looking to grow the account as much as possible, this simple scalping strategy may be the one for you. We'll go through everything step by step, what we're looking for, when to trade, higher time frame bias, entries, risk management. It'll all be in this video. If you do like these sorts of videos, don't forget to subscribe. Without further ado, let's get into it. So for those of you who have followed the channel for a while, you'll know that I like to use 2 time frames. I like to use the 1 hour in order to determine our bias, and then the 1 minute for entries. And the reason I do that is the 1 hour helps me decide whether I am buying or selling the next hourly candle based on how the previous hourly candle is closed. So if we look on the hourly chart here, we can see how many consecutive candles we have. So when one candle closes bullish and then the next candle also closes bullish, and then vice versa for sells. So one candle closes bearish, we expect the next candle to also continue bearish. Now obviously this doesn't happen all the time, but it does help me as a beginner trader to have that bias on whether to buy or sell, because the pattern that we trade on the 1 minute happens so often that unless I have that directional bias from the previous hourly candle, I find myself over trading. And the continuation theory of a previous hourly candle has closed bullish, therefore we're buying, or vice versa for selling, just helps streamline the process of my trades and helps me know exactly what pattern to look for on the 1 minute. So today's the 18th of September, and we can see that we've already had some continuation candles since this morning. So the 4 till 5 candle closed bearish, so did the 5 till 6, so did the 6 till 7, and then the 7 till 8. And then instead of continuing bearish, we have started to push bullish. So from 8 till 9, we have this bullish close, 9 till 10 also bullish, and then 10 till 11 bullish as well. So I'm looking to take advantage of these moves. The theory that I trade is if one candle closes in a certain direction, why can't the next candle continue in that same direction as well? So this is the only 1 hour pattern that I use. We're looking at how the previous hourly candle is closed and taking a trade based on that. I do prefer when we see average range candles. So the average range candles are when price is pushing each hour around the same amount of pips. So this one here is 20. Candle after it is 21.2. Candle after that was 22 as well. And these are the ideal candles that I look to trade, where price is pushing in one direction with similar sized candles. The reason I do prefer to be in average range candles, it just means that there's potentially more momentum coming into the next candle. So let's say for instance we have a candle like this. This was probably news inflicted, but look at how many pips that price has pushed for an hour. 134 pips. Where price has been selling off for an hour. So even though we have closed bearish, and the way I trade is we've closed bearish, we have to look for sells on the next hourly candle, there's a chance that I would stay away from a candle this big, simply because price has opened here 135.308. It's then closed at 134.024. It's a huge bearish candle. So sellers have been pushing price all the way down for the past hour. Now that was the 8 till 9 candle. Price opened here, closed all the way down here. And if we compare that to the other average range candles, it's probably 7 or 8 times the size of those previous candles. So when the new hourly candle opens, so the 9 till 10, what are the chances that price is going to continue down? It obviously can. Price can do whatever it wants, and it does, but I'm not necessarily looking to get involved in a sell where price has pushed so much for an hour, because I may have missed the big move that I would have wanted to be a part of. Now obviously sometimes we are going to have big hourly candles and then continue in the same direction as well. So here from 1 till 2 we have a big bullish candle, probably news inflicted, and then after that we actually continue upwards for the next 5 hours. So I'm telling you this just to keep an eye out for those really big, usually news inflicted candles, and then potentially staying away from the next hourly. But obviously this is all dependent on your own risk tolerance. If I see a huge news inflicted candle, I usually stay away for an hour or two after, just until price gets back down to those average range candles, and then I start trading again. Because the thing is, we are trading off the previous hourly candle. So there may be trades every single hour, which means there's no pressure to trade after an odd looking hourly candle, because there'll probably be an opportunity in a couple of hours time anyway. Now that we've got the hourly candles out of the way, let's have a look at the 1 minute pattern we look out for. So this is a trading opportunity from just this morning. So 8 o'clock price opens here, pushes up, and then closes here at 9. So once we've determined how price has closed previously, we will be looking for buys only during the new hourly candle. So we wait for the previous hourly candle to close, then look at the 1 minute for a pattern to appear. So we can see here at 8:53, as we're waiting for that previous hourly candle to close, price starts making lower lows and lower highs. We can see that there, price is clearly trending downwards. What you'll find is on a 1 minute chart, price trends a lot and the momentum can shift from being bearish or bullish in a matter of minutes. So if we look at the line chart here, we can clearly see lower lows and lower highs. Now, even though we have made lower lows and lower highs, we have still closed bullish on the 8 till 9 candle, which means we will still be looking for buys during the 9 till 10 candle. So what I look out for on the 1 minute chart is where price shifts back into our direction. So we are looking to buy based off the previous hourly candle. So we are looking for momentum to shift from pushing bearish to start pushing bullish. So in a downtrend, we are going to see price making lower lows and lower highs. Now our bias is to buy, however we can't buy when price is making lower lows and lower highs, obviously. So what we want to see is we want to see price make a lower high, and then instead of continuing down and breaking the previous low, what we want to see is price do this: make a lower high, then make a new higher low, break the previous high, which is here, and we would have a shift then from bearish momentum into bullish momentum. So lower lows, lower highs, failure to break the previous low, which is here. Once we make this lower high and then we fail to break this previous low, we are just looking for an entry opportunity. Now the entry opportunity would be the break of the previous lower high. So we have to buy based off the previous hourly candle. Price has been trending downwards, lower lows, lower highs. If price exhausts and can't break the previous lower low, then potentially buyers are going to step in and push price higher. The theory behind it is if price can't continue down, it has to go up. Well, it can go sideways, I suppose, as well, but it's more likely to go up if we can't break this previous low and we break the previous lower high, because that just shows the bearish momentum is depleting and buyers are stepping into the market. If buyers weren't stepping into the market, then price would break this previous low and just continue downwards. But the fact that we haven't broken this low means that potentially buyers are stepping in. So once we fail to break this previous lower low and we break the lower high, then we are potentially shifting bullish. So let's have a look at this trade from this morning to hopefully illustrate the idea. So we're going to split screen view here on trading view, hourly on the left, and we can see exactly what the hourly is doing while we trade on the 1 minute. So like I say, previous hourly candle bullish, we have to buy. The new hourly candle that we're going to be trading, so the 9 till 10 opens here. Now if we look here at 9.23, price made its lowest point. So lower lows, lower highs. Here's the lower low, so the lowest point of this candle. We then came up and instead of respecting the previous lower high, we actually broke through it, which shows that potential shift into our direction. Now we can't just take a trade once we break this high. We want to see what happens to the new low. So what we want to see is how price reacts to this lower low. So once we've made this higher high, we are looking for price to shift to then make a new higher low. So there's low, lower high, new lower low, then the violation of that previous lower high. So we made this lower low, and then instead of price continuing down, we shifted, made a new higher low, which is here. So all we would then be looking for is for price to break the previous lower high. Theory is the lower lows and lower highs that price was making are no longer respected. We've then shifted. The previous hourly candle was bullish, so our bias is we are buying. And then another factor that adds to the confluence is the fact that the current hourly candle, so the one that we are trading, is bullish when we break the previous high. So if we look at how the candle we're trading developed, price opened here at 9 o'clock. It then pushed down to create this wick, which is what these lower lows and lower highs are on the 1 minute. It's then failed to push any lower and broken the previous high. Now, if we look on the hourly chart, what's happened to this candle once it's tried to push down? It's now pushing past where it opened, which means the candle is now flipping into our direction. It's tried to push down, failed, has broken the previous lower high, has now made a new higher low, signs that buyers are stepping in, broken the previous high. Whilst we break that previous high, we are also flipping bullish on the hourly candle. These are all just signs that price may continue upwards. Once we break that previous high, we got our 1 to 2 risk to reward. So shortly after that trade closed, we closed bullish on the hourly candle. So the 9 till 10 candle, the one that we've just traded, has closed bullish. So we could then look for trades on the 10 till 11 based off the continuation idea that price has closed bullish previously. Why can't it continue bullish? So if we look here on the 1 minute chart, the 10 o'clock candle opens here. We've already started to make lower lows and lower highs during the previous hourly candle. So if we look on the line chart, hopefully it'll illustrate it a little bit better. So there's the high, the low, the lower high, the new lower low. We made another lower high. And then with this one, the shift is a little bit closer to being a double bottom pattern. So some people would see this as a double bottom. Others would see this as a shift, so price closing higher than it has previously. So after these lower lows and lower highs, we make this low. Now we don't necessarily need to make a new higher high in order to get into a trade. It's more about how the low is respected. So the previous trade, it just happened to make a new higher high. But let's say the high was here and we still had that shift from the lower low not being broken. I would still take this trade once we break this high, regardless of where that high closed. It's all about this shift. So low not being respected and then a higher low. That's the main point. Because like I say, the idea is we're buying. We've been making lower lows and lower highs on the 1 minute chart. We've failed to break this previous low. So what price has done, there's the high, there's a low, there's a lower high. There's the new lower low. We've then come up and made a higher low. Again, if you see it as a higher low and not just a double bottom. And then we want to see price break the previous lower high that it created. Stop loss on this could be 5.5 pips. Because with stop loss placement, I like to use half and whole numbers. So 5.5, 6, 6.5, 7. I never have a stop loss bigger than 10 pips. And I never have one lower than 2. Once we break this high, you can see that we are bullish on the current hourly candle. Another sign that price is going to continue up. We go for a 1 to 2. And then that would have been another winning trade this morning. So I'm really hoping that this is making sense. Let's have a look at another buy example here. So if we look at this example here from Tuesday, from 1 till 2 we closed bullish. It is quite a small candle, but either way it is a bullish candle. So once we've closed bullish, we wait for the new hourly candle to open, which is the 2 till 3. So that is here. And then we just wait for lower lows and lower highs to be created. Sometimes they can start during the previous hourly candle. As long as we have that shift from a lower low to a higher low during the current hourly candle, we can take the trade. So here at 2:15, we can see that price starts pushing down, lower lows and lower highs. If we go onto the line chart, hopefully it'll illustrate it better. So here's the lower high. We then come down to make a new lower low. So we can see that there, lower lows and lower highs. We've then made this lower low, so the lowest point of the candle. We then make a lower high, which is here. This one is higher than the previous higher high, but like I say, that doesn't necessarily matter. We only care about if the low is respected. So once we make this lower high, we then get that shift where price is no longer able to push down and break the previous low. We then break the previous high. Now with this one, our entry will have to be a bit later, simply because we need the candle to be into our direction. So this one would be a 4 pip stop loss. I always go for a 1 to 2 risk to reward, moving stop loss to break even at 1.5, and then that would have been another winning trade. Now people ask me if this strategy works on more than one pair. Currently, I've only back tested it on Great British Pound US dollar. The reason for that is because we are scalping and we are looking at how every hourly candle is closed and then taking trades on a 1 minute. We are quite preoccupied with just one pair. We're looking for certain patterns and then executing on a 1 minute chart. That's tricky to do if we have multiple pairs. So currently I'm just testing it on Great British Pound US dollar. Going forward, I may include more pairs. However, if a candle is always going to close bullish or bearish and is always going to be an opportunity for a buy or a sell, I don't necessarily see the reason to be trading multiple pairs at this point. But like I say, the reason I backtest so much is to get more and more data, find out what works, what doesn't. There may be better pairs than Great British Pound US dollar. These are the things that I'm going to find out. Let's just have a look at Euro USD for an example. This was another trade from this morning. Previous hourly candle is bullish. We can see from 8 till 9 we have a bullish candle. Price opens there, closes there. So we'll be trading a 9 till 10 candle. During the previous hourly candle, we start to make lower lows and lower highs. We get all the way down to here where price makes its lowest point at 9.28. We then come up to make this lower high, push down, but fail to break the previous lower low. So there's that shift from this low to this low. So once that happens, we can look for a buy. Current hourly candle that we're trading doesn't turn bullish until there. So that's where our entry would be. There's 7 pip stop loss, and there is another 1 to 2 from this morning. So we have to wait for that current hourly candle to be in our direction, just to give that extra confluence that price is now shifting and pushing into the same direction as the previous hourly candle. Now again, this is something that I personally wait for. You might have a higher risk tolerance and take the trade just based off the pattern itself. We also had a trade just before that. So from 7 till 8, we've closed bullish. If we look there, price opens there, closes there at 8 o'clock. So we're trading the 8 till 9 candle. We can see here at 7.48, price started to make lower lows and lower highs. We made the lowest point of the candle here before not violating this previous low. Let's have a look on the line chart to hopefully illustrate it better. This way I like having line chart favorited, just so we can quickly look at the line chart and then get back to candles, just because like I say, we are trading in the 1 minute, so we do have to be quite quick. But on the line chart here, we can clearly see lower lows and lower highs. We make this low, then make this lower high, and then instead of breaking the previous low, we make this higher low. But this is the pattern that we're looking for. We're just looking for that shift where we can't break the previous low. Our bias is we are buying. And then with this one, the hourly candle flips bullish. much closer to the shift. So the shift is here where we've made a new higher low. If we look for the break of the previous high, it'd be there. Stop loss would be 5.5 pips. And if we look at our entry, we are bullish on the current hourly candle. So everything lines up, and then in the space of 5 minutes, we would have hit our 1 to 2. So these are the backtesting results that I have had so far. I like backtesting just to get as much data as possible, potentially look at other pairs, look for certain setups that work and ones that don't. I use Zella for all of my backtesting. The link will be in the description, but we can see the account growth that we have had. Now the differences between the backtesting and live markets, obviously this will be harder to replicate in real life. It's something I'm going to try and do, but whether we'll be able to do it or not, who knows? Because with backtesting, emotions and things like that are less likely to get involved. Whether I'll be taking this many trades as well, I don't know, because with the backtesting study, I've been taking every single hourly candle close. So from 6 a.m. all the way up until 4 p.m. Now, obviously, in order to do that, you would have to be sat at the markets all day. And that is where you're more likely to overtrade, revenge trade, and all those types of things. So whether I would do that or take a couple of trades per session. So if we looked at taking 2 trades during London and then 2 trades during New York, let's say we took a trade at the 6 a.m. hourly candle and then the 7 a.m. hourly candle, regardless of how those trades got on, we stuck to just 2 during London. Then we stepped away from the charts, went out for a walk, went to the gym, did whatever, and then came back during New York, so 12 till 4, then took 2 more trades then. That's potentially a healthier way than just sitting at the charts all day. However, if I can see that I'm profitable by sitting at the charts all day, it's something that I'm going to do, because we've been able to grow this $100 account into 1.1 million. Like I say, backtested simulated settings. This will be much harder to do on live markets, and I understand that, but by backtesting, it does help me practice this strategy, as well as give me data on what works and what doesn't. You can see our win rate is only 53.68%, so we're right just slightly more than we are wrong, but because we're going for that 1 to 2, it does work out profitably. Now originally I was risking 5% per trade, which again is a lot higher than I probably would do on live markets, but it just helps scale the account up because we risk 5% of the current balance, not the initial balance. So every single time our account balance gets higher, more money is at stake. I've now gone down to 1% because we have a big account anyway, so 1% is more than enough money at risk. The Zella score is good, so this shows things like your consistency. So when you're trading, if you're trading the same times every day, which I do, profit factor, win percentage and everything is in the Zella score. Now what I like about Zella is if we go into reports, we can see a real breakdown on the account. We can see how many trades we've taken, which is now at 690. 328 of those were winners, 283 were losses, and then 79 were break even so far. Max consecutive wins is 10 in a row, and our max consecutive losses is 7. It'll show you average hold time, so 20 minutes is how long we're usually holding trades for. So this is obviously a scalping strategy, so we're in and out much quicker. If we go into reports and go on day and time, it'll show you an hourly breakdown. Now, like I say, on live markets, I'll probably be taking the most profitable hours and just trading them, just to give myself time to do other things as well. So I've had good results at 3 o'clock, we've had good results at 4 o'clock, we've also had good results at 7, 8 and 11. So potentially these are the hours that we want to be trading. Like I say, there's more backtesting to do to get more data like this. Now with the backtesting data, I'm only taking 1 trade per hour. So every single hour, if there's a trade that sets up, we can take it from 6 till 4. However, there's only 1 trade per hour. So if we get into a trade and it wins or loses, whatever, we can only take 1 trade per hour. Now, like I said, there's a lot more data that I'd like to find about this strategy. I will be using it on a live account shortly as well. So make sure you subscribe so you don't miss those videos. But if you do have any questions around this strategy or anything else, please let me know in the comments, and I will see you in the next one.